All right, hello everyone. K Kim here, and thank you for tuning in for another episode of live midweek update. Thank you guys for being here. For those of you who are here in a live event, and thank you for tuning in. For those of you are watching this through my blog or YouTube. And so the market pulled back. So we're gonna go through what we're gonna do today. We're gonna actually go through every single indices today. We're gonna look at S&P 500, Dow Jones, Nasdaq. We'll look at semiconductor today and the Russell Transport and New York Stock Exchange, and just kind of go through all of those and see where we're at, trying to ascertain where the market is. And obviously, before we get into it, I do want to let you guys know that I do think that correction is over. I do think that the market is going to resume back up to its primary term uptrend. I do think that primary term trend is healthy. We did have concerning signals when we saw, that decline right here. I mean, that just it's about 3 days, boom, 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 and then we stayed here for a little bit, gotten right back up here, and so this is probably one of the fastest correction we've seen. I mean, just how fast it came down, how fast it got back up. It just only took what, like 2 months, right? A little bit over 2 months. I mean, really, this was a level that, I've been talking, some of the levels that we've been talking about, if you've been following me on these midweek update events or the videos, we've been talking about these levels. You guys remember that? These levels right here. It's very important that we understand these levels, because these are the levels that can help us, can gauge, these are the reference points. And so we can kind of understand, when the price is at a certain level, we can kind of understand, hey, where are we at as far as the health is concerned, as far as the sentiment is concerned, as far as the psychology is concerned, right? The traders and investors. And so obviously we've been talking about these levels. Obviously this was a level that we've been talking about as a level of fear. Anywhere below this level was obviously a panic, and that we didn't get to that level of panic, and we got up to this kind of a level of what I call confusion, right? This is a level where we talked about how bulls and bears are both going to be a little bit confused. Are we bottoming here, or are we going to, it's going to be a bull trap here before just having huge market crash? What's going to happen, right? It's below 2050 and above 2000 level, right? There's a confusion level. So, but obviously, we went up, we came down, we went up, and then it's a little bit of volatility. But you know what you can understand is that obviously once we gotten out of fear level, we don't see a lot of shenanigan like gap ups and gap downs and a lot of volatility throughout the day. Pretty much the market has, it has its ups and downs. I have to say, anywhere above about 240, 250, it's been bit like just the way the movement, it's been smooth. I mean, we came down, we went up, but just kind of, observing kind of daily fluctuations, right? The intraday market. I mean, this was crazy here. I don't know if you guys been, watch any market sentiment throughout the day or intraday. Just there's a lot of crazy shenanigan happen here. And once we gotten above the fear level, things got a little bit more calm. And then once this is a level that we talked about, right? Above 2050. Above 2050, we talked about what? This was a level that we talked about as a complete reversal zone, right? This is where I talked about bulls getting a lot of confidence. Just because we gotten above this level, things not going to go straight up. We're going to pull back. That's something that, you and I understand, that the market doesn't go straight up. So we are at this level. This is a very, very important level, that we're above 2052, 2050, 2048. It's a very, very good sign for the buyers that we're above this level. Obviously, there are still people out there still calling, it's not over yet, that we're still going to have a huge decline, the correction is still going to come. There are always people saying stuff like that, obviously. And so, like I said, I'm going to deal with a tangible data. What's the data that we have? We have this data right here, right? So that's what we're going to deal with today. And S&P 500, obviously, when we look at this, we gotten up here pretty quickly. And 200 SMA, you see that daily chart right here, you see that 200 SMA has been somewhat acting in support. I want 200 SMA to extend, there you go. So you can see that 200 SMA acted support here, acted as support there, here, and here. what happened is we looks like we're kind of back at that level. So we're not sure at this point that we're going to find support at that level. I think the worst case scenario, I mean, you know, worst case scenario, I'll give you worst case scenario. Let's say we see a steep decline, right? We come all the way down to 2,000 on S&P 500. It would still be considered. Can you hold on a second, guys? Okay, I'm back. So it will still be considered as intermediate term uptrend. So I'm not saying that that's what's going to happen. I do think that if anything else, you know, maybe if it continues to, you can see that 10 EMA is currently just kind of, you know, we're just kind of declining here, and then we hit that 10 EMA today. We saw a little bit of a decline, and so if we continue to see, because a minor term, obviously we're seeing bearish sentiment, right? The bearish sentiment, and so if we're not able to hold this level, I do think that it's kind of possibly going into this level right here. There's a gap right at 2052 and 2059. So if you guys have any questions, you can feel free to ask on your left chat panel there. Anyway, so this is a level probably the bears are kind of drawn to these, you know, gravitate towards these gap areas. So that's probably might be where we're going here. But we do have a 200 SMA right above that, and we also working with a 20 MA. Obviously, 10 MA has been acting as support here back in October 15th and also October 22nd. We lost that just a couple of days ago, and looks like currently forming some kind of a bear flag, right? So that bear flag, if that bear flag plays out, probably next level support is to look. It's about 2060, 2050. If you're really looking at these things closely, I don't look at these things that closely. I don't care so much about, you know, this couple percent, you know, declines and stuff like that. And obviously, when we see declines like this, oh my goodness, right? That is gonna work. That's concerning, very much so. However, you know, we understand that when the market the market needs to establish certain kind of uptrend. So, you know, it's gonna go up, it's gonna come down, it's gonna go up, it's gonna come down. That's what we call uptrend, higher lows and higher highs. So it's just definitely a natural, you know, action that we're seeing, that after this kind of a move, we're gonna see some kind of pullback there. So first level of support you want to watch probably, you know, next few days, and until next week is 2050. Because obviously 2050 is important level, because I think once the price starts to go down, get down to that level, we're probably gonna meet up with that 50 EMA right here. You see that, you know, pink dotted moving average here. That's a 50 EMA there that acted as a resistance, very strong resistance. We threw that shooting star, came down very, very fast. That was after Fat minutes. And then you can see that we had a kind of high wave doji, high wave spinning top, kind of acted as a morning star reversal. We talked about that, you know, if we see a follow through, we're probably gonna see a move. So that was the evening star reversal, came back down to the support, through a morning star reversal, see a follow through above 1020 MA, and that was a move that just ignited this whole thing, right? So that 50 MA is important because the 50 MA acted as resistance in the past. So if this thing starts continuing lower, I'm guessing it's going to meet up with that 50 MA, and that's an important level you want to watch. And if we find that level of support, because it did act as support right here, do you see that? You see right on this October 14th, this is a level where 10 and 50 MA, first time since the decline, they crossed back up to the upside. You see that X right here, the blue and pink, right on that level there, a little bit like a bull flag there, and continued on. So that 50 MA carries a lot of weight because it acted as support here, it acted as resistance. So boom, boom, it's a strong pivot. It's like a strong pivot moving average, right? And then, you know, once we get back to this 2050 level, obviously 2050 level is why important. That's a pivot. That's a strong pivot, right? We acted as strong support in the past, and then we broke that level. We broken above that level, and potentially could act as support again. Again, that 50 MA coming back up here, and that gap area, right? A lot of times when you see these technical points, right, when they're colliding like that, that's when you want to pay attention. If this level breaks, next level is probably about 2,000. And this is what I would call 2000 is a level what I would call a must hold level. It's a level that you must hold. The buyers must hold. I mean, you know, we may come down a little bit lower, but this is a level must hold because this is still can be considered. If we come back down that level, that is still considered as an intermediate term higher low, which means we are still in a prime, intermediate term uptrend. We can still bounce there. But first things first, we want to see how we're gonna react next couple more days, right on the 20 MA and the 200 SMA, and then see how the gap is gonna play out if we fill that gap and 2050 there. So this MACD of S&P 500 here is interesting to note that I think we've been talking about this as well. This is level that last time, 2011, we found support there, and then today exactly the same spot. You see that right there, right here. And you guys remember my article on S&P 500 deja vu 2011, looking at the candlesticks, we had the exactly same. The difference is right now though, last time when we saw a little bit of decline right here, you see that we saw that decline, we see that pullback. You went up, came down, we pulled back, and then we saw that move. Well, it was nowhere near the highs. You see that was high. We kind of came down the middle of it. I bet if I do Fibonacci analysis there was about 50%, I'm guessing. Not so much, about 61.8%. And then we pull back from it. Well, the difference today is we're pretty close to the all-time highs. So it's a little bit different sentiment, though MACD is giving us exactly same sentiment. So basically what MACD is saying that we have almost exactly same scenario playing out. That's what it's saying. Basically, we pull back, and the buyers who bought it at this level, they bought it back up. The sellers also who sold at this level, they flip and they start buying because they learned their lesson, right? Last time we saw this kind of amount of decline, I sold it and then I got burned. I bought puts and I got burned. People be like, oh, the last time I bought it here, I made money. So those same people, they remember these things and they coming and doing the same thing in MACD is exactly. So MACD is kind of telling us that, hey, we have bottomed, we have reversed, and then now let's get back into primary term uptrend. Again, that's kind of where I stand. I still think we are, the correction is over. We're probably going to see some up and downs, minor term shakeout and things like that. But as long as if we stay true to the primary term and intermediate term uptrend, I do think that will continue higher. And we want to see some cultivation of an uptrend. So, a lot of times the pullback is a necessary thing. Pullback is what creates a trend. Trend does not get established without pullbacks. If we just even look at this here, trend we've seen, this is in 2011 correction. That's I mean, you called it a little bit of correction in between, but this is how you create primary term uptrend. And then we're back here, which I do believe that we're going to continue to do that. Let's look at Dow Jones here. Pretty similar sentiment here, very, very similar, just the way playing out here. I mean, this is an important level that we clear that level. I mean, as far as the level is concerned, these are the level that we need to clear. We cleared it very, very fast, and we're kind of getting back to that, that 200 SMA and 50 MA level there. So those are the levels we want to watch. On the Dow Jones Industrial Average, you want to see 17,640 or 17,540 levels of next support. If we lose that level, we want to see about 17,117, 17,022 levels of next support there. And so we'll have to see if this level gets hold. Interesting also, these, and this is a weekly chart on the Dow Jones there. Take a look at this 200 SMA on the weekly chart, right? This is a 200 SMA on the weekly chart, right? Resistance, support, and a support, right? So we're dealing with a prolonged uptrend. So it's important, it's imperative that we look at weekly chart. Most people do not, they forget to do that. And so not only we look at daily chart, we also want to have to look at a weekly chart, because weekly chart acted a strong pivot moving average at that weekly 200 SMA, right? It resistance, flip back at support, and again, the same guys bought it up here, they're coming back up, right? So let's look at NASDAQ. Pretty similar sentiment here. We got big gap on the NASDAQ here, so that's going to be a pivot. So next level of support will be 5,000 on the NASDAQ composite, where the 20 EMA is residing. And then this gap area, right? So the gap area could act, this level can act as support, or the gap fill, right? So one of those levels is going to be act as support. When it fills a gap, it acts as support. Sometimes the beginning of the gap, or the end of the, or the top of the gap can also act as support. So about 5,000 here is the next level of support to watch, and then after that about 4,899. But as long as we stay above 4,899, should consider as an intermediate term uptrend. Something about NASDAQ that really cues you look at this, we're still in a primary term uptrend, right? I mean, in between, a lot of times what people usually what they freak out about is when they have the support that gets stolen, or that gets not stolen, when that gets broken, right? We talked about that. This is back in 2011. That support was broken right here, and we stayed here for a while, but you see how the market established another support level through that, right? This support was broken because it was support from here and there. But market, once we broke that support, it came down, established another support just underneath that. Right? So that's exactly what happened here. Exactly same sentiment happening right here. Right? We had this support going right here. Support, 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 and support. That was broken briefly, and then the market just came down, respected the support underneath that, right? So technically we're still in a primary term uptrend, and it's healthy. I want to add that it's healthy. We're still cultivating, we established this, and when we have bounce like this is now well established support. So we have bounce from it. This is opportunity. I've been talking about this last few months. This is opportunity before, because I mean, it's the thing about psychology thing is that, do you want to buy it up here, or do you want to buy it down here, right? When you're trying to buy it up here, well, you're scared because now it's gone up too much, so now you're scared to go up and start to buy. When it's down here, you're scared to buy because, well, you think that maybe the correction is not over, we're gonna have a market crash. You gotta make up your mind, right? You gotta make up your mind. Let's look at semiconductor. Semiconductor, though, what's really important about semiconductor is a monthly chart. Any questions so far, though? No questions. Very good. Monthly chart. I wrote an article about this, or I did a video on it maybe a couple months ago. This is a very, very important level on semiconductor, because finally, semiconductor broken out of this 14 years of consolidation. You want to call it accumulation, you want to call it stage one, right? It took that long. It took 15 years to repair itself after this shock, right? Just a huge shock. We had a huge bubble move, and then just crash, and then just like, we're in the world we're going. What's going to happen? And finally, we broke out, back in late 2015, 2014. Can I do Apple early today? Yes, I can. We will do Apple early. And so we're gonna wrap up with this indices, because I'm not gonna overanalyze. I've been doing enough. And so now this is important level, because we just talked about the trend is not gonna be what? It's not gonna be established without a pullback. This is really not a trend. That's just a craziness, right? That's not really a trend. That's just a hyped up bubble move, right? But this, a pulling back, is a trend. This is very important again because I use now, I use example of this, right, on NASDAQ. So up here, as far as the price action and sentiment is concerned, and I still think that the semiconductor is going to be leading this market to about 1200 there. So let's look at daily chart real quick. So these are some of the important levels here. We're kind of retesting them right now. If we lose that level on the semiconductor here, you want to see about 620, 630 holding, right? 630 holding some of these levels there. So if we lose that level, then we may have kind of a mini double top level, double top, which is a minor term reversal, not an intermediate term. That could bring it down to maybe about 620. Again, these levels not going to be exactly precisely 620. It might come down to like 613 or 14, but it's the vicinity that's important. And then, potentially we continue to cultivate what? Higher lows and higher high. That's low, higher low, high, higher high there, which is a cultivation uptrend. So monthly is very, very important. Let's look at Russell. Russell has been weak, much weaker than other indices. This is a level that is important because we kind of formed this kind of an awkward looking double bottom, or you want to call it inverted head and shoulder, it doesn't matter, but some sort of a bottoming pattern there. We did talk about bullish divergence that we saw just like 2011 correction here, right there, and we talked about this. Right, the price action making what? Lower low, lower low, and MACD making higher high. That was what? Higher low. That was a bottoming signal there, and then we have exactly the same signal. Okay, these are the sentiments telling us that the same people who bought, clandestine buyers, right? These value buyers, dip buyers, there many times can be a short term, because if the market doesn't do well, they will exit quickly. But if market starts to move up, these guys will stay, and these guys will start this uptrend. And that's exactly what I think is going to happen. It's going to take some time. You're probably not going to go straight up. We go up, come down, we go up, maybe get another correction here, go up, but then sooner or later, you know what I mean? If you give enough time, enough leniency, it will move back up, and that's exactly what we're seeing. And we're seeing all of this in every single indices that we just looked at, right? Transport, I'm actually looking at transport, IYT, iShares transportation average to get long for a very long-term trade. I'll give you guys a certain level to watch, about 152. So above this level is where I think the buyer is going to declare victory, and we may see transportation average getting back up to this, primary term uptrend. You can see that last time, this is a level that we hung around for a while, okay, and this is a level you want to go long, and then you want to kind of keep riding it for a couple of years or so. We have similar sentiment going on here. So if we can clear some of these level about 152 or so, then I think we can, get back to its uptrend, right? So transport still though declining 200 SMA. There is bearish connotation and bearish sentiment looking at the more of a primary term uptrend, because obviously we've seen these moving averages coming down. So there's still wind is still kind of blowing to the downside. But we are, I think if we go to right here, iShares, I think that primary term uptrend is more vividly getting respected there, obviously, right? So again, do you want to go long here, or do you want to go long here, or do you want to go long, somewhere here? Okay. You know what I'm saying? Like, do you want to go long here? I would rather go long here, right? When it's pullback. So when we see a pullback like this, do you want to go long here, or do you want to go long there? So that's kind of what I'm looking at here on the transportation to go long. It's not ready yet. Finally, New York Stock Exchange. Obviously, the primary term uptrend is still going there. It's a little bit more concerning for New York Stock Exchange because we kind of put in like a little bit lower low here. Okay, so it's like we're kind of like, what is this? Is this a start of a downtrend? You know, is this a lower high and then it's gonna do something like this? You know, and it could be, but obviously New York Stock Exchange kind of the only index with a lower high or lower low there, right? This is a lower low. That's a low. That's a lower low, right? High, lower high. So if this thing to be if New York Stock Exchange wants to establish a downtrend or cultivate or inaugurate downtrend, we will need to see another lower low there. Obviously, this is the only index with the potential signal there, so we can't put too much weight on it. But you know what? Maybe it could be something else down the road. But right now, it's perceived to be most wicked. More weaker than any other index. Transport obviously is not. I mean, you can't. We're more like equal lows there. So for New York Stock Exchange, we need to gap back, but we're not yet at the complete reversal zone, right? That will be about 10,702, 10,750 or so. This is going to be the vicinity where you're going to see, because obviously Dow Jones and NASDAQ and the S&P 500 is already at a complete reversal zone. And NASDAQ or the New York Stock Exchange is not. So we need to see how it's going to play out. So looking at the major indices, again, I'm still in a camp that the correction is over. Obviously, you know, looking at the S&P 500, I'm going to put the most weight on the S&P 500 and the Dow Jones and the NASDAQ and Russell. Looking at this, I do think that, you know, the correction is done. We might see a pullback. We might see even more pullback here. But as long as we stay true to its cultivation of an uptrend, then I think it will continue higher and it will probably resume back to its primary term uptrend, right? One last thing I forgot to talk about is a monthly chart on the Dow Jones, right? This is important that we need to hold this level right there, right? That was very, very important that we hold that level, right? This was resistance, and we had a little bit of shakeout here. You see that how perfectly respected it. Resistance, support, got back up, came down, retested it, and then last month we see that from a big monthly candle there. We're actually back above all these moving averages. We got daily, you know, obviously not daily, but 10 EMA, 20 EMA on the monthly chart there, right? So if we can continue higher from this point on, that will be a very, very strong move that might be ahead on the Dow Jones there. Because a lot of times what the stocks do is that they would like to, when they break out, they want to retest that level. Because people will be calling this a bull trap. So we got to keep that and keep those people guessing. So what it does is we break out, we retest, and then we go, right? But if this thing were to fall, then there's a problem. Because a lot of times a bull trade can lead to a further decline, like much, much severe decline. But when it doesn't, you get a huge move to the other side, right? So obviously for me, when I look at the market here, I think that they're healthy. I think that we're going to resume back up. It's a primary term uptrend. I think is in the process. We're probably going to come back down a little bit here. But we're just looking for next higher low. That's what the market is looking for. I mean, this move here is very, very fast move on the S&P 500. It's not really sustainable as far as, it's not, you know, we can't call that a high, these little thingies are not really a, you know, perceived higher low as far as the intermediate term concerned. When I say intermediate term higher lows, at least some of these declines are, you know, categorized as intermediate term higher lows, right? So after this kind of move, I wouldn't be surprised to see, you know, this thing pulling back. But we wouldn't know if it pulled back to 2000 or 2050 or 2000. But either way, either any of these directions, it's going to consider higher low there. So any questions on the indices before we go to Apple? No questions. Okay. All right, let me get a. Well, Apple came down, but here's the thing. I'm still on Apple. If you just look at this here, okay. If we just look at this here, we have an intermediate term uptrend in cultivation, right? You guys understand that Dow theory trend is assumed to be in effect until give us a clear signal that it has been reversed. Well, in the intermediate term, we are still in a cultivation, so that's a good sign. However, we're back down, we're back below 10 EMA. 10 EMA is declining, 20 EMA is declining. 20 EMA acted as resistance yesterday. Looks like, that doesn't look like anything right now. Looks like we're barely hanging, dangling on that 50 EMA there. 50 EMA though, it's an important level because of the fact that it has acted as resistance. This was back in August or September 25th and September 15th, right? So it could act as resistance. It's also that 200 SMA looks like that is acted as resistance there, right? So right now, the way I see it, I don't think this thing is gonna is you know what I mean? There are probably people calling some weekly inverted head and shoulders, though it can be, right? That's what they're seeing. Left shoulder, head, right shoulder. The problem with that though is that we have some cultivation going. You see that high and there's a higher high? A lot of times the right shoulder does not get formed with higher high and higher lows in place. Though anything can happen in the market, anything goes in the market. However, we're talking about probability for this being actual head and shoulder formation. You can see it right here last time when we had a head and shoulder formation. Do we have any kind of higher lows, higher highs here? No. It's left shoulder, head, right shoulder, broke the neckline, boom. Right? Well, this one, that's a good left shoulder. Though the head part is just too much shenanigan going on here. A lot of times you want to see more of a, kind of up and down move. But okay, we'll just let that one go. And then we got this higher high and lows going. Just kind of destroys this sentiment, right? And so I'm not putting a lot of weight on that right now. I'm not putting weight on that that's going to be weekly head and shoulder formation because of the cultivation that we have right here on the intermediate term. So obviously, gotta love the stock market because they never want to make it easy for anyone. Because they're, a lot of people are looking at certain levels, right? And then once, they think that once we clear these levels, this thing gonna go to the moon. And sometimes it happens. Sometimes it clears a certain level and this thing just goes to the moon. However, the pullback is inevitable that pullback is gonna happen, right? So the pullback is actually a good thing, right? I always say we gotta embrace the pullbacks. Without the pullbacks, there is no trend. If there's no trend, then it's dangerous because you're going to see shenanigan happening like semiconductor where it goes straight up and it comes straight down and it takes like 10, 15 years to repair. We don't want that. So this is an important level that we're holding, and let's see if we can hold that level. If we get below this level, let's see where we're at. Okay, so looking at Fibonacci here, if we lose that level of support right here, right on that 50 MA, next level to look is about 11 or 1345 to about 1283. There's a little bit of a potential old resistance new support of 112.56 there, right? So I think if we can hold even 112, that is possibility can be categorized as intermediate and high low there. So I'm still pretty optimistic on Apple. If you have to guess on next week's, we are going to see down or upside, and what would be targets for both? I think Obviously, you know, did you say next week? Next week's, next few weeks. If we can find support, right? 2 weeks. Okay, if we can find support in 112, 113, because of this, every time when we're working with the gap, things can get hectic. So if we bounce from here, we're probably gonna come here and then do stuff like this, and then just gets a lot of really, you know, just things get hectic. It may stay here for a while before really getting back up. I don't know if I can find any. Here. There's a good example right here. You see that big gap, right? So you see that big gap in January 2014. We got up here, and then just things got hectic. It seems to happen all the time. It seems to happen a lot in Apple too. And there's a gap right here too. And we filled that gap, and then things got hectic for 2 weeks. Right? 2 weeks, couple of weeks. This one is much longer. Like what? Few months or so, few months and a half. There's a gap. Hecticness. A hecticness. So we have a gap here. So I think there's gonna be some things happening, even though if we bounce. 113. If the market continues to see, weakness next few days, Apple probably gonna continue with it. Because currently the sentiment is kind of a bearish in a minor term, especially with the gap down. It seems like a lot of short-term traders are panicking. That's kind of what it looks like. A lot of short-term traders are just like, oh my god, what's gonna happen? You know, obviously for me, that doesn't cause them to panic at this point. I'm just still saying, can these levels act as support? So yeah, 113 could be possible. If the market continues to see weakness or, you know, decline, then I think that Apple probably gonna continue lower, maybe 113, 112, and then probably gonna wait until the market, you know, kind of reverses back, or market sees some strength. Then possibly we may see this thing getting back up. However, we do see there's a little two dojis here. I wouldn't know until I see what happens tomorrow, but that doji is basically a lot of times, that's kind of how I see it. Obviously, when we see a big gap down and we see two dojis, it's kind of like, you know, your car trying to brake from this fall or something, like a steep fall, and it's like you're like trying to like brake it, like, you know, just making that noise, you know, you're trying to brake. So that's what you're trying to do. And so if we see a gap up move tomorrow, maybe even slightly gap up, and then if we see something like this, that could be a Morningstar reversal, right? You can see that bearish, a gap. There's a little bit of gap. There's a doji there, or spinning top, and then we get a gap up. And then if we finish tomorrow, this would only work if we see a gap up and a strong finish. This will be a very, very fast reversal, and that will get back up to about 120 in like by Monday or so, or even Friday. But that's only if we gap up and see that, you know what I mean, see that bullish move, bullish close. And we are right at that strong support, which is that 50 MA, also coinciding with the 50% retracement zone, and also colliding with that 100 SMA level. So it's an important level here. It's actually good that we did close with doji. They're not like these long, ugly looking candles. So if we see a gap up and positive close, that could do it. That could just get back up here, and then things could get hacked a little bit, and then continue higher from that point on. You're very welcome. So I personally think that Apple is going to do very, very well if you give it some time. I think, obviously, you know, I read an article, 150 is my next target. I even think that 170 is possible. Here, weekly chart. Let's go here. No, let's look at RSI. The MACD works too, but right, Remember my article called the RSI, the bottom color, right? See, psychologically, it's very, very difficult for many to go long here after this kind of decline because they're still feeling that pain, that shock, right? But this is where you want to go long, and this is where you want to hold things, right? Right, for a couple of years, you hold for a couple of years, you're good. You made pretty good money. And right now, this is a weekly. Oh, this is daily. No wonder it looked weird. Thank you very much. There you go. That's what I was actually talking about. There, and there. So since 2008, obviously 2008 with a market crash right here, you don't have to trade this long term. You had two chances. Okay, you don't trade a long term. Two chances. When 2009 and 2013. That's it. I mean, yeah, you could have gone long here and then ride it up, and you can trade for a couple months here and there. But you want to do this for like a couple years, right? You had two chances: 2009 and 2013. This is opportunity, and that's exactly where we're at. This is opportunity. You want to trade this for another year or so, another year or two. This is a point, and it might not happen. It might not play because nothing's guaranteed in the market. But this is a pretty good opportunity. Obviously, RSS giving us that chance, and obviously, I just talked about the market, coming out of correction, potentially getting back, resuming back up to its primary term uptrend. So everything is lining up here. Sometimes you just gotta go for it, right? And so I have a lot of high hopes on Apple. That's a pretty good move, and that's still a pretty good move. And we may get another move there. Do some Elliott wave. I think sometimes it doesn't always work. Wave 1, wave 2, 3, 4, 5, right? Before A, B, C. That too. But I mostly though I think that this is a correction that needed after this. And I thought it came too early. I was actually thinking that we may get a little bit more move, maybe to about 150 before actually seeing that correction, because I thought. That's why I didn't see this coming. I thought we were going to see, because I really did not call this pullback. I didn't even think that was going to come that early. And I didn't even think that this was a potentially topping pattern. I just thought more of a consolidation pattern. Obviously, right. So we came down there. We saw that correction. And then now with that well-cultivated, intermediate term uptrend here, if we can get something going, then that might be inauguration of an uptrend there. Do you see 120 stronger? 120 stronger resistance. That the last rebound high was 124. Do you see 120 stronger support or stronger resistance? 120 currently is gonna be probably as resistance because of the gap fill, right? So we have this gap. So every time when the gap gets filled, it becomes kind of a resistance, right? That was gap, resistance, resistance. How we stay here for a while. Same thing here. We filled that gap, became resistance. So it's gonna be a resistance. But you know what the important thing was though? You know what really important thing? Remember we keep tweeting about 120. We need to get above 120. We need to get above 120. Remember I talked about that. We need to stay above 120. Yes, you remember. Well, it's not because once we get above 120, we're gonna go straight up. That's not why I said that we need to stay above 120. Even though it's pulled back, we have cultivated something. Right? We have cultivated. This was a last known strong pivot. Okay, you see the support and resistance? What if we were not able to get above that level and we got up and then we tanked, right? Because then there's still a threat that potentially that this could still continue as a downtrend. The reason that we got this here, because again, people want to call it a bear or a bull trap, or it's the cultivation that's important. That higher high is exactly what we needed. So when it pulls back down, it pulls back down to create a higher low. Instead, it's more difficult when this thing does not get above 120 because this is important level. We were able to reclaim, the buyers were able to reclaim that. This was the last known lower highs, right? So it's important that we reclaim that. Though it pulls back to create another higher low there. I don't know if I can find an example of that scenario. I don't think I can find any example right now, but it's important that we cultivated that higher high, because I want to see what I wanted to see. Can you give me an intermediate term uptrend development? That's what I wanted to see, right? And clearing major pivot, right? So now even you can look at this as a higher high, right? The really, you know, when it was dangerous was this part right here. If this would have come down, continue lower, then it would have been, you got the high there, you got the lower high there, you got a lower high there. If this continue lower, then it would be lower low, lower high. That's a downtrend, right? And we broke that by clearing. First level was clearing 116, and then the next level was clearing 120. Though it pulls back, it's okay, because we have cultivated something. People always say, well, let's just act like this never happened. No, it happened. And it's important that it happened, right? It's important that it happened. Any other questions? Yep, you're very welcome. So let's see what happens tomorrow. Yes, this started about 48 minutes ago, and I am recording it, so if you came late, then I will send you the recording. Yeah, I'll look at Apple tomorrow, and I'll tweet it tomorrow. See what you know. Again, you want to see if you want this thing to be a Morningstar reversal. We want to see a gap up. So if you don't see a gap up, then it's probably not gonna be it. And if we see a bearish candle like this, then probably going lower. But if we see a gap up and a bullish candle, that would consist of Morningstar reversal. However, we need a follow through. So then if we see a follow through, reclaim up 10 EMA, then probably we'll continue higher. A little bit of, you know, we're probably gonna get some sideways movement right on that gap area though. Let's go Tesla. I don't like Tesla. I haven't liked Tesla. Haven't traded Tesla, and it just, again, you know, it's just getting a lot of it's just really ugly chart. We have lower highs here. That's the high. That high is lower than that. This high is lower than that. Potentially inverted head and shoulder or something. Minor term. You got a hammer there. You want to trade this. Kind of a short term, maybe next target up here, 270. I don't like trading like that anymore. I used to. Then you want to go long right on here, probably target of 270. Yeah, it's just ugly looking thing. Just the MACD is declining, seeing a lot of resistance here, little lower highs. Price is not going anywhere. This is a weekly chart of Tesla. It's gonna be hard to trend trade. It's gonna be like a swing trade or day trade. So I'm not interested in it. Let's talk about Google. I like Google, or now they call it Alphabet Inc. Yeah, once we got, again, this is the thing about it is, you know, this is accumulation, or you want to see a consolidation. Once we break out of it, a lot of times a stock, what it wants to do is it wants to retest it. Because there's gonna be a lot of people calling it a bull trap, and so they're gonna, you know, it's gonna keep both people honest. What's gonna happen? Is it gonna be a truly bull trap before just going to nothing, or are we gonna retest this resistance as a new support? And once we respect that level, this thing thrive. and I think 800 is where it's going there, maybe even higher. But it's been doing that all year long. I mean, it's all its lifetime. That's all it's been doing is just retesting these levels and then just going higher, right? Resistance, support, boom, right? If you know where to look, resistance, support, boom, right? Resistance, support, boom, right? You had 3 chances to go along here. Longer term trade, 2007, 2012, and back in just a month ago. Now it's too late. Yeah. 3 chances for a longer term trade. Any stocks that you want me to talk about or anything like that, or any other questions? Otherwise, I will end the session today. No questions. Very good. Well, I will let you guys go then, and let's see what happens on Apple next few days or the market. Let me actually look at let's look at Spider real quick before I let you guys go. Yep, some of the levels that we need to watch, right? Oh, we got a little bit of gap here. I didn't know we had a gap. Yes, we did. We looked at it. So yeah, next level about 204 there. If we continue to see decline about 204, 205 level, we're gonna see hold, and potentially if that level gets hold, then we might see a bounce there. But you know, obviously currently sentiment is bearish in the minor term, so we might see continuation of that pressure. So, all right, well, thank you very much, guys, for coming out. Thank you guys for watching, and I'll talk to you guys next week.
Your line is now muted.